Tuesday the 9th of April, and yesterday the dollar index took a hit, so it wiped out the gains for the previous 2 days, Thursday and Friday. So we're back to where we were beginning of Thursday, end of Wednesday, which means that the market's just going sideways and doing nothing, and I've got to wait for a breakout on the dollar. I think the whole world, well, every dollar trader is obviously waiting for a breakout on the dollar. I've no idea what happens next, but I would imagine a break below last week's low in the dollar index of 96.96 won't be helpful for bulls. So maybe we'll be heading down below 96.96. We'll be looking at the mid Bollinger Band of 96.84, 83, and then we've got some support down here at 96.64.60. Australian dollar versus the US dollar cannot make up its mind. It really doesn't want to go anywhere. Just move that down a bit. Cannot make it up its mind. Look, it's up one day, it's down the next. There's clearly no trend whatsoever over the past 3 weeks. There's not much of a trend before that either. Yesterday we're back up to testing the highs of last week. So we got up to 71.31. You know that I've got 71.35. 45 as a resistance area, so if you're scalping the very, very short-term levels, it's working. There's just nothing else you can do in this pair. I have no idea which way it's going to go. The New Zealand dollar has resistance at 67.35.45, and if you're short, you need to stop above 60. Yesterday we got to 67.55, so I'm still holding a short in there. Right, the dollar yen did reverse from this trend line. I wasn't sure if it would. It wasn't the strongest resistance level, but it did seem to work. So let's look at the weekly chart just to remind myself. Okay, we've backed away from the 200-week moving average, which I saw as more important, but as I said, we never quite got there. So we're now back below the 200-day moving average, although that hasn't had a huge impact of late. I think it's still worth noting. So the 200-day moving average is around 111.50. So holding below 111.50 should be more negative. If we push higher, we've got resistance at 111.90, and then anywhere from here up to 112.15 really, because don't forget we've got that 200-week moving average at around 12.10. So that low 112 area, high 111, low 112 area will be a significant resistance area. Holding below 111.50 could push us down to 111.10.00. There's quite a lot going on down here with the moving averages and all that. So really, bears then need us to break below 110.80, and that would be more negative for the dollar yen. If you're a very short-term trader, look at the hourly chart in the dollar yen. This could be a little head and shoulders pattern. This could be a left shoulder, head, right shoulder. The neckline around the Fibonacci level. There's two short-term fib levels around 111.32. So break below, what was yesterday's low? 111.27 would be quite negative. 111.20, 111.07 are the short-term moving averages. And then there's a little bit of a trend line down here at 110.80, call it 110.90 by the time we get there. So that ties in with that sort of 111.00, 110.90 area that I have on the daily chart as well as support. So if you are selling it on a break below 111.27, yeah, there might be 25 pips in it. Euro US dollar has bounced to the midpoint of the Bollinger Band at 112.80, so that's relatively significant level. That was my target actually. So we've got there. Now, the daily chart and the weekly chart just don't make any sense at all because we're just going sideways. So to get any perspective of movement, you have to look at the 1 hour chart, whether you're a short-term trader or not. Now, this resistance here at 112.44 worked perfectly with a 200-hour moving average. Once we broke higher, I wanted to see it up around 112.80, 85. We got to 112.75, so we didn't quite get there, but we've got the 500-hour moving average of 38.2% resistance, and we've got a trend line dating back a little bit further. So that's obviously resistance 112.80, 112.85. We're going to have to get through 112.95 to have cleared that. But it looks like, being such a sideways trending market, we're now going to turn around, wipe out some of the recent gains. And we've got support down at 112.45, 112.35. Below 112.25 would be more negative. And risk a retest of recent lows around 111.90, 111.80. Great for scalping if you don't mind trying to nick 30 pips here and there. Anything more than that, you've got no hope right now. A break above 112.95 can take us up to 113.15. And then we've got highs from last week at around 113. Well, 32 is the high, so anything up to 32 will be a little bit of resistance. Canadian dollar just wiped out almost 3 days of recent gains, very much in a sideways pattern, back down to last week's lows. What can I tell you here? Well, the 100-day moving average is no longer having any effect because we've just gone sideways for so long. Clearly, we do have some support at last week's low around 132.92 with a 55-day moving average around 132.88. I've got no trade ideas for you on this. This is just a sideways mess. Actually, looking at the short-term charts, if you really do want a trade idea in the Canadian dollar, US dollar versus Canadian dollar, it's moving at the 200 and 500 hour moving averages are at sort of 133.50, 60. Well, actually, the 100 hour is around 133.50, and these two around 133.60. I think that's the only place where I would place a trade. So if you want to sell within that 10 pip range, you can have a stop above 133.70. It's low risk. It's not the greatest trade. I'm not certain it will work, but I am seeing some resistance at 133.60 in the 4-hour chart as well. So that is my only trade suggestion for the dollar versus the Canadian if you fancy a punt. Cable didn't know what to do with itself yesterday, sitting in a pretty tight range of, what's that, 55 pips, which is quite small for this pair with all the drama that's going on around the pound. But I'm going to stick with that good support level down at sort of 129.90, 129.80, stop below 129.60. And if we do dip, we're going to then test a less important 100-day moving average at 129.34. Break below there is going to be more negative. We have a little bit of resistance here at 130.90, 131.00, and then above here we're looking at 131.60. And more importantly, this would be a great sell. Well, this would be the best sell, depending on what's going on with the whole Brexit farce. But 132.15, 132.25 looks like a good resistance level if we were to get that far. But you're talking about a rally of over 150 pips to get there. Gold continues to be one of my favourite markets. After a confusing period through March, I will admit, I think I'm back on form. We were buying down in the low 1280 area and we were looking for it to head up to the low $13 area, and that's exactly what happened. We got up to 1303, which was bang on the Fibonacci resistance, just above the midpoint of the Bollinger Band. So I'm happy with that. I assume you took your profit. If you held the long from down in the low 1280 area, we're looking at nearly 20 points profit. That's pretty tasty in gold, pretty tasty in any market these days with all this sideways movement. If you've banked that, well, let's just check the longer term chart. Yeah, so we've obviously got resistance in that low $13 area, 1301, 1303. If you were brave and you got short, you've also done quite nicely there. We've got a little bit of support around 1294, 1292. Below there, we're going to retest that 1280. Well, this area is rising a little bit because the 100-day moving average is rising. But I'm still going to call it 1284, 1282, and you'll need a stop below 1280. So that's pretty low risk if we come back down here and test it. Now, if we do break lower, that's going to be more significant because I think I'm still of the belief that you can call this a head and shoulders pattern. And then we'll test the 500-day moving average down here at 1274. Break below there would be even more negative. So if you're sort of selling below 1280 into a short position or stopping out of a long and getting into a short, you could then add on a break below 1274. Now on the upside, if we get through to 1305, that's going to be more positive. There's minor resistance at 1307.08, minor resistance at 1313. I wouldn't be selling at either of those levels, not into a short position anyway. And then if we go up, we're looking at 1319.21. Silver's running into resistance around 1525. If you're short here, you'll need a stop above 1530, maybe above 1532 would be more accurate, but I prefer trading gold. Oil looking good now after that confusing pause, which I wasn't expecting. Now we're doing what I thought we would do and go higher. A little bit of resistance at 67, 63.70. We're through that now. Looks pretty good. This just looks like it's going to power on. If you're still holding longs, I'd be happy. 64.80, 65.30. What's this low here? 65.75. All looks pretty good for oil. There's nothing to stop oil from heading significantly higher from what I can see. If you fancy a bit of a gamble, I would short the E-mini S&P. We've got a trend line going back a month and a half, almost 2 months. We halted there at the high, which I think was on Friday of last week after the non-farm payroll number. Then we dipped yesterday, and now we're back up. And this could be a little double top. I think it's worth having a little gamble on that being a double top at the trend line. Okay, it is a gamble, so don't risk much money. Well, you should never risk more than 1% anyway. Hold on a sec. You should never risk more than 1% on any trade anyway. It doesn't make sense. You can't afford to blow big holes in your account. I don't really have a sell signal here, so I'm kind of speculating a bit, but I'm going to short it. We're overbought. We've had a heck of a good run. That's a decent trend line. Maybe this is a tiny double top. There's nothing on the weekly chart except for the fact that we're very overbought. Anyway, if you fancy a little punt here, just around the 2900 level, you'll need to stop above 2910. Let's stop above where the Bollinger Band is now. So roughly a 10-point stop. But the downside is significant, so the risk reward is worth it. But as I say, it's a gamble. There's no sell signal. It's not a clever technical trade particularly, but I'm going to give it a go.